Right now, it looks like the Chinese Communist Party is falling. The Chinese banks are failing. Some are right now limiting withdrawals as we speak. And not only that, there are protests that are popping up all over China in multiple cities with tens of thousands of people refusing to pay their mortgages. In this video, I'm going to tell you why China is on the brink of potential collapse and what's really the only thing left for the Chinese Communist Party to do. And I'm going to tell you how that is going to affect China, the rest of the investment markets around the world, including cryptocurrencies and Tether. And I'm also going to talk about what they're doing in Europe right now in the regulation of the digital asset space, because what they're doing has some concern in the United States about what the United States is doing to regulate crypto assets. I'm going to talk about it in this video. Hey everyone, my name is Randy. Welcome back to the Late Night Grind. And right now on this channel, we are covering the Ripple versus the SEC case, as well as other cryptocurrency news, investment markets, and personal finance. So if any or all these topics interest you, make sure you go ahead and hit that subscribe button and join the Late Night Grind community. Don't forget to hit that bell notification icon. That way YouTube will send you a notification when I release a new video. Also, if you do a couple things, I'd appreciate it. Smash the thumbs up button and watch this video all the way to the end. Also, I have recently seen some videos on China, and several of them said that whenever they make videos about China or the Chinese Communist Party, their video gets downvoted into oblivion by Chinese bots. So if you want to help me combat that, please go ahead and smash that thumbs up button, as well as leave a comment in the comment section down below. If you do that, I'd really appreciate it. All right, guys, let's jump into it. So you may have heard some of the news coverage about what's going on in China right now regarding what they are calling a mortgage boycott. There's some US mainstream media covering it. There's some other countries that are also covering it in their mainstream media. And until a couple of days ago, there was actually a few Chinese news agencies covering that story. However, the Chinese Communist Party has now sent instructions to those media organizations to cease and desist covering this outbreak of protests and all the people joining that protest refusing to pay their mortgage. So here's what's going on, why these banks are on the verge of collapse. In fact, one bank is now halting withdrawals. The fourth largest bank in China has halted withdrawals, or at least limited it. And why the last time there was a real estate collapse in China, the Chinese Communist Party political party didn't seem to think it was too much of an issue, but this time they realized that they could be taken down by it. And so to stave off this, there's only one thing they can do, and I'll get to that in a minute. Okay, so why are tens of thousands of people joining this mortgage protest in China, and what's it doing to their markets? Well, the Chinese real estate market is basically on the verge of collapse. They're over leveraged. There's over $6 trillion of loans that are outstanding that are not being covered right now. And why this is so bad for that market is the fact that a lot of that $6 trillion is actually uncollateralized, meaning that $6 trillion is supposed to be for the coverage of building of these construction projects that aren't even built yet. So let's take a look back at 2008 in the US, the mortgage and credit crisis that happened. It was bad, but it wasn't nearly as bad as this. Now, actually, some analysts are saying that what is going on in China and their severe real estate mortgage crisis is actually 100 times worse than the US mortgage crisis was in 2008. So in 2008, the US had a mortgage crisis, but a lot of those loans, a lot of that debt was actually collateralized by houses that were existing. They were already built, they were already there. A bank could simply take over that house and sell it, albeit probably at a loss, but nonetheless, they could still recoup a lot of their money. However, in China, most of these loans are uncollateralized and most of the homes aren't even built yet. So what happens is it started off with one huge housing project that basically had issues building these houses. And because it's taking so long, the homeowners who were paying mortgages all along the way while they were waiting for their homes to be built went after these companies and said, we're no longer paying our mortgage until our house is complete. Well, herein lies the problem. These builders were taking the new money from the new sales that were coming in and using it to cover the expenses and losses from previous projects. So even though there was new money coming in, it wasn't for building the homes that the civilians had actually purchased. So it's basically a giant Ponzi scheme that is now falling apart. So it all started with one construction project, then two, then three. Now there are literally tens of thousands of people joining this protest that had put down payments or were paying monthly mortgage payments on houses that were supposed to be built, but now it looks like they're not going to be built. So all of these protests that you see on the news requesting money back from the banks that they took money from, well, it's getting pretty ugly. So the Chinese Communist Party realized that they have to do something. Well, they first started by sending tanks into the streets, which according to them was to provide stability. And if you remember tanks in the streets in China, it brings back memories of Tiananmen Square, where thousands and thousands of people were murdered by their own government. So with that as the backdrop, we're now seeing the modern day version of this, and people looking to take down the banks, which are essentially over leveraged and on a losing side of a bet that they placed years ago. So this real estate collapse in China is not going very well. Like I said, $6 trillion of uncollateralized loans is about to sink the real estate market, and of course it could sink, and of course that by extension could sink many other markets. Now here's why the Communist Chinese Party is a little bit more fearful this time, because that is reaching into banks, one of which, like I said, has already placed withdrawal limits and even halts on what people can withdraw from their savings account. And when that happens, that puts major political pressure on the Chinese Communist Party. So analysts are now saying that this differs big time from the one back in 2008, because this is reaching into the bigger banking market, which then of course has their hands in the bigger political market. And of course, when that happens, the Chinese Communist Party realized that this is really the one thing that could actually damage them or even take them down altogether. So what the speculation is, the one thing that the Chinese Communist Party could do that they didn't want to do last time is provide a bailout for a sector, because they said it promotes risky business behavior. But this time, when they realize it's their butts on the line, well, guess what? The speculation is that they're looking to provide a $1 trillion bailout for their real estate market. Now, if you have $6 trillion worth of debt and you're only getting $1 trillion, in my opinion, that might just be a drop in the bucket, but it might just be enough to stave off this issue and help these construction projects at least get back on their feet and hopefully continue to finish out these construction projects. Now, how does this tie in with the rest of the markets? Well, if you look at my last video, I talked about what the M2 global money supply and how it relates to the total cryptocurrency market caps and how it's very much correlated. And right now, there is a global tightening of monetary supply, which is almost, according to this chart, at the bottom. Now, what would be needed for it to basically release some reserves or release some liquidity back into the markets? Well, something like this, China essentially printing $1 trillion worth of value back into the markets, could be that first domino to cause a cascade effect of a global liquidity release. Now, of course, here in the United States, we're fighting major inflation. There's now rate increases, and there probably will be for another at least 6 months. However, what that may do is, of course, dry up demand, create a surplus of things, which of course helps drive down inflation. And if that's the case, there could definitely be an increase in liquidity in global money. And of course, that is what pumps the markets, and including cryptocurrencies. So there we have it. All eyes are on China right now. It is a crazy story. There are some crazy protests going on. You might want to check out Twitter or even YouTube for some of the clips of that stuff. It's pretty crazy. Okay, so what does this have to do with the crypto market and Tether? Well, like I said, this could be one of those catalysts that provides liquidity into the markets. But number two, Tether was basically rumored to have exposure to all kinds of investments, specifically real estate investments in China, and that was what was backing Tether, which is supposed to be worth 1 Tether to $1 US. Well, of course, it was found out that they don't have all those dollars backing the amount of Tether, and they come out and said, well, we have investments, we have paper investments that are essentially backing that. And some of the investigation found out, well, they actually have a huge exposure to the Chinese real estate market. Evergrande was, of course, the one that made news, but now, at least according to Tether, they said, no, we have no exposure to China in the paper markets, in the real estate market, and in fact, our paper exposure, meaning the actual assets that back up Tether, are down from 30 billion down to about 3 billion compared to last year. So in terms of stabilizing news, well, that would be considered good for the cryptocurrency world. So let me know in the comment section down below what you think about what is going on in China. To me, that is absolutely crazy. All right, so let's move over to another continent and talk about what Europe is doing, this regarding specifically digital assets, the cryptocurrency world, and the regulation. So they have an office called MiCA, which basically means the markets in crypto assets. And what they've been doing was last month they had a huge proposal, a huge digital asset proposal, cryptocurrency proposal, and they're continuing to set the bar higher and higher for regulation for the cryptocurrency world, which is typically seen as a positive. Now I saw an analysis of this. This was actually by Patrick Henson, who is a venture advisor at Presight Capital firm. He actually posted what MiCA was doing. He said it's already years ahead of what the US is doing in terms of crypto regulation. He said this is what's becoming a grave concern for US regulators, and he's 100% right. Now, a lot of it has to do with the SEC messing things up and not providing any rules of the road or clarity, which we've all been talking about ad nauseum for well over 2 years now. But it also looks like the CFTC, in fact, the commissioner for the CFTC, Carolyn Pham, recently came out regarding what MiCA is doing and said it's important that the US becomes a rule maker and not a rule taker. In other words, just seeing what other countries do and then attempting to adapt it to our markets isn't exactly the smartest thing. The CFTC wants to take the reins on the cryptocurrency world, and it doesn't seem like the SEC wants anything to do with it other than using it as its personal shooting gallery. In fact, Fortune magazine just came out with an article the other day in which they talked about the SEC and essentially the mess that they're making, specifically with Coinbase. Now, they did say Coinbase looks like it's in some deep trouble. However, the SEC is what caused that trouble. So how far is the SEC actually going to get in its investigation, in its lawsuit against the SEC, when it's basically going to be up against the same thing that it is in the case against Ripple, and that there really was no clarity, there's no rules of the road, so how can you attempt to call something a security, even if some of those definitely fit the definition of a security, when really you never provided any rules along the way or even warnings, because as it's been proven that both Ripple and Coinbase met with the SEC several times, there was still absolutely no warnings given. And so, Gary Gensler, we await your resignation. All right, guys, I want to thank you so much for watching this video all the way to the end, for smashing that thumbs up button, and as always, I'll see you guys on the next video.